Hello everyone, myself Shilpa, Assistant Professor, Department of BCom PA, PPG College of Arts and Science. Today we are going to learn about the introduction to banking. Banking is one of the most important sector in every economy because it helps the people to save the money, borrow funds, makes payment, and invest safely. Bank Act has a bridge between the people who have surplus money and those who need money for their business and the person. Origin of banks. The history of bank dates back thousands of years. Banking activity first began in the ancient civilization like Babylon, Greece, and Rome, where the temples and merchants accepted the deposit and provided the loans. The word bank is derived from the Italian word banco, which means a bench. Money changers in Italy used benches in the marketplace to conduct the financial transaction. The modern banking was developed in the Europe. In India, the banking system expanded with the establishment of Presidency Bank during British rule. These banks later became the part of the State Bank of India. Today, the banking has evolved in a technology driven industry that offers the digital and the online services. And classification of the bank. Banking refers to the businesses of accepting deposits from the public and lending those funds to the individuals, business, and the government for productive purpose. Banks are classified into different category based on their function. The first one is central bank, which regulates the entire banking system. The second one is commercial bank, which provides the banking services to the public. The third one is cooperative bank, which serves as a member and the farmers. The fourth one is regional rural bank that focuses on the rural development. The fifth one is development bank which finance the long-term industry and the infrastructure product. The sixth one is foreign banks which operates the branches in the different countries. The seventh one is small finance bank which provides the financial services to the smaller borrowers. Payment banks mainly offers deposits and payment services but cannot provide the large loans. Banking system. A banking system refers to the structure through which the banking services are provided in a country. There are different forms of banking system. The first one is unit banking. Unit banking operates through a single office. The second one is branch banking, which has several branches across the location. Universal banking provides all the financial services under one roof. Banking market facilitates the financial transaction and the investment. A strong banking system promotes savings, investment, employment, and economic development. It also improves the customer convenience through a better accessibility and the digital services. Unit banking. Unit banking refers to a banking where a bank operates through only one office without any branches. Its major advantages includes the better management of supervision, personalized customer service, faster decision making. And the disadvantages are limited financial resources, restricted geographic area, less diversification of risk. Although unit bank is less common days, it is still found in some countries and local financial institutions. Branch banking and universal banking. Branch banking means a bank that operates through multiple branches located in different cities and the state. The system allows the customer to access banking services from the various locations. The advantages includes wider geographical coverage, better customer convenience, efficient utilization of funds. Universal banking refers to providing multiple financial services under one institution. A universal bank offers banking services, insurance, investment services, mutual funds, and the financial advisory services. For example, it also includes the larger commercial banks that meets all the financial needs under one roof. It reduces the need of customer to visit the multiple institution. The functions of modern commercial banks. Commercial banks performs two categories of function. first one is primary function and the second one is secondary function. The primary function accepting deposits from the customers, providing loans and advances, creating credits. The secondary functions includes agency services such as collecting checks and paying bills. Utility services like locker facility and issuing demands draft. Digital banking services includes the internet and the modern banking. The foreign exchange services for the international transaction. The balance sheet of the commercial bank. A balance sheet shown the financial position of a bank on a particular date. The balance sheet has two sides. One is liability, and the next one is asset side. Liability sides includes share capital, deposits, borrowing, and reserves. The asset sides includes cash, loans and advances, investment, and the fixed asset. The balance sheet helps to measure the financial strength and the performance of the bank. Credit creation by the commercial bank. One of the unique function of the commercial bank is credit creation. When a customer deposits the money, the bank keeps only a portion as a reserves and lend the remaining amount to the borrowers. The borrower spends the money which is gain deposited into another bank. This process continues and creates the additional money in the economy. The process is deposits to loan, loans to new deposits, and it comes as a more loans. Credit creation increases the money supply, supports the business expansion, creates the employment and contribution to the economy development. Conclusion. To conclude, the banks are the backbone of every country's financial system. They mobilize public savings, provides loans, facilitate the payments and credit creation. Modern banking has become faster, safer and more technology driven. A strong banking system promotes the investment, employment, industrial growth and overall economic development. Therefore, understanding the banking fundamental is essential for commerce and management students. Thank you.